Hello, welcome to the Wealth Starting Line. Don't forget to like, comment, share, and subscribe.
All right, let's just jump right into it. We are about to tear down one of the most common and honestly one of the most destructive pieces of advice in the entire world of trading. You've heard this a million times, right? It's that classic Wall Street saying. And it sounds so safe, so logical. I mean, of course, a profit in your pocket is better than one that could disappear from the screen. It's just common sense. But what if I told you that this safe advice is actually a trap? That following this one simple rule is the very thing that keeps most traders stuck, preventing them from ever making real, life-changing money. Let's dig in. So get this, one veteran trader, after decades in the business, said that locking in profits was one of the single most worthless pieces of advice he'd ever gotten. That's a huge statement, right? So let's see what's actually behind it. This same trader pulled off something pretty incredible, 15 straight years of being profitable. And he didn't do it with some super secret complicated algorithm. Nope, he did it by following a handful of really simple, almost backward sounding rules. And the biggest rule? He threw that old Wall Street wisdom right out the window. And here's the absolute heart of his philosophy. The real, account doubling money doesn't come from 1,000 little wins. It comes from catching just 2 or 3 massive trends over the course of an entire year. And that whole lock-in profits mindset, it makes it virtually impossible to ever do that. So why is this advice so sticky? Why do we keep falling for it? Well, it's because it taps directly into a powerful psychological glitch we all have. It's a well-known cognitive bias that pretty much guarantees we'll cut our biggest winners way too short. And here's the official name for that glitch, the disposition effect. Put simply, it means we're super eager to sell things that have gone up in price, but we're incredibly stubborn about selling things that have gone down. We're literally hardwired to do the exact opposite of what we should be doing. And this just perfectly illustrates that broken logic, doesn't it? On the left, with a winning stock, our brain is screaming with anxiety. Sell it, take the money before it's gone. But on the right, with a losing stock, suddenly we become these infinitely patient long-term investors, just hoping and praying it'll come back so we don't have to face the pain of being wrong. Okay, so if our natural gut feelings are basically trying to sabotage us, what's the fix? Well, this veteran trader's entire framework is built specifically to fight back against those harmful instincts. It all comes down to this one simple, powerful idea. Flip that natural tendency completely on its head. You have to be patient with your winners and completely impatient with your losers. Seriously, a small loss is the best friend you can have in trading. The strategy is called trend following. Now look, no strategy is a magic bullet, and this one can struggle in markets that are just chopping sideways. But its principles are designed to make the absolute most of it when a powerful trend does kick in. It means you stop trying to fight the market. You buy stocks that are already strong, the ones hitting new highs. Your goal isn't to be a bargain hunter, it's to be a momentum rider. You're basically finding the winning army and fighting on their side. So how do you actually add to a winning trade without getting yourself in trouble? You do it strategically with what's called a pyramid up strategy. You start with your initial position. Then, as the trade works, you add smaller chunks, like a third or a half of your size, on minor dips. This clever approach lets you press your advantage while making sure your average cost stays well below the current price. And this is the single most important rule of them all. There are 0 exceptions. You never, ever, ever add to a losing position. We call it averaging down, and it feels like you're getting a good deal, but you're not. You're just throwing good money after bad. A losing trade is the market telling you you're wrong. You have to listen. So if these rules are all so simple, why doesn't everybody just follow them and get rich? Well, because doing so requires you to fight against your own human nature, the instincts we've developed over millions of years. Our brains just weren't built for this stuff. And the root of the problem is this concept from behavioral finance called loss aversion. It's been proven over and over. The emotional pain we feel from a loss is way, way more powerful than the joy we get from an equal-sized gain. This chart just lays it out perfectly. Losing $1,000 hurts about twice as much as making $1,000 feels good. And that massive imbalance is what forces us to make terrible, irrational decisions. That fear of pain is what makes you hit the sell button on a good trade just to avoid the tiny chance it might turn into a small loss. And this isn't some new discovery. The legendary trader Jesse Livermore said this almost 100 years ago. He said, "It never was my thinking that made the big money for me. It was my sitting." The hard part wasn't figuring out what to buy. The hardest part was having the discipline to just sit on his hands and let his winners do their thing. And that really is the key, isn't it? The technology, the companies, the markets, all of that changes constantly. But the human operating system, our fears, our greed, our biases, that software hasn't had an update in a very, very long time. The same mistakes just get repeated over and over again. Okay, so let's wrap this all up. If the real goal is to catch those 2 or 3 monster trends each year, then the single most important skill you can develop is the patience to let your winning trades run. Now, get ready for this, because this one statistic is an absolute game changer. In most major bull markets, the final 10% of the time often produces over 50% of the total gains. Just let that sink in for a second. More than half the profit comes at the very end. So what does that mean? It means every time you lock in your profit, you are systematically guaranteeing that you will miss the most explosive, most profitable part of the entire move. You do all the hard work, you sit through all the boring, choppy parts, and then you get off the ride right before the fireworks start. So here's what it all comes down to. The best trading rules aren't complicated. They're simple, because their main job is to protect you from yourself. Your job isn't to be a fortune teller. It's to be a trend follower. It's about watering your flowers and pulling your weeds. Add to what's working and cut what isn't. At the end of the day, discipline is so much more important than genius. And that really just leaves us with one final thought. The next time you've got a winning trade and your mouse is hovering over that sell button, just stop and ask yourself one simple question. Am I actually following my plan right now, or am I just trying to make my anxiety go away? The answer to that question might just change everything for you.
Thanks for watching. Don't forget to like, comment, share, and subscribe. See you next time.